Hi there, this is Escrow Accounts Explained. So one common misconception is the word escrow in its use. There is an escrow term that we use when you're buying or refinancing a home, and then it goes into escrow, and that's an escrow account that's short-term where the transaction happens. We're not going to talk about that today. We're going to talk about the escrow account that lenders set up for you for your taxes and insurance and sometimes some other expenses, but typically it's the homeowner's insurance and the property taxes. Sometimes it's required and sometimes it's not. In the cases where it's optional, we look at what's best for you. The benefits of having an escrow account is that it smooths out the expenses over an annual period. For example, some states require the taxes to be paid all at once, like Oregon. Other states have the taxes paid once every 6 months. In either event, you've got a big check you're writing if you do not have the taxes included in your escrow payment. What the difference is that payment, if you have the escrow excluded, in other words, you're paying those things separately, you'll have a lower monthly payment, but then you have these large expenses throughout the year. So an escrow account can often smooth things out. When it's required is when there's a consideration around the risk of the loan, or if you put less than a certain amount down, escrow accounts are required. And so we'll hold back money for your taxes and insurance. There's some rules around escrow accounts. One of them is they have to be reviewed on a monthly basis internally, and they must be disclosed to you on a review externally on an annual basis. And they review it and make sure that they're not holding too much of your money or too little. That's where your payment can adjust based on whether they held too much money or too little. Typically, they held too little because your taxes went up and your payment's going to go up. Now, the rule is they can only hold 120% of your annual needs at any one time. So if there's an overage, you'll get that refunded to you. If there's a shortage, they'll adjust your payment accordingly. And in rare cases, you're allowed to make an additional payment to catch up. Now, the benefit to not having them included is that you have that money. And if you're really good at managing your money, you have that money sitting somewhere else and you're prepared for your annual expenses. For example, when your homeowner's insurance comes due, you're able to write that check. Often those bills are over $1,000 and sometimes into the several thousands of dollars, depending on the cost of insuring your house. Property taxes almost always are in the 4-digit, sometimes 5-digit category. So having that included in your monthly payment can smooth things out, even if it's optional. Anyway, our team will explain to you what your escrow account looks like so you know exactly what to expect. In the event you're preparing to buy your first home, please reach out and we'll go over all those numbers with you so you know what it looks like and whether the escrow account is the right thing for you or not. We appreciate you and thank you for listening.